Good evening and welcome to tonight's webinar member-only content where we look at ASX investment opportunities in review for the 21st of June. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. We use the Interactive Broker Global platform, which gives our clients access to our top 20, top 50 models, access to US equities, as well as our high conviction portfolios. The most common structure is a combination of the ASX high conviction and the ASX top 20 and top 50 models. If you'd like to talk to me further about how our broking account service works, please contact me on 1300 614 002. The technology you're using tonight is the Investor Signals member area. You can subscribe to it for $1,320 if you're joining us this evening as part of your free trial. Again, don't hesitate to give me a call in the office and I'm happy to guide you through the operation of the software. Starting this evening with a look at the S&P 500, and we're into the first sort of 2 or 3 days of selling that we've seen for a couple of weeks in the US market. The Nasdaq's held up a little better, and as a little backdrop as to what's driving sort of this increased volatility, it's predominantly that the front end of the interest rate curve has spiked, which is reflecting the likelihood that the Fed will respond to higher inflation as a result of and as a result withdraw their level of treasury purchases and also look to raise interest rates. Now obviously we're coming off emergency levels, and any increase in rates has a revaluation impact on equity markets. Interestingly, the 10-year Treasuries, so if we say the longer end of the yield curve, is not rising, it's actually falling. So what that does is create conditions that are negative for bank earnings, and as a result of that we've seen Citigroup in the US down 14% and a number of the other US banks sell off from their recent highs in similar magnitude. As the interest rates on the longer end of the curve on the 10 years have flattened, what we've seen is money move back into the technology area, so the Nasdaq's rallied. So the reason why we see this sell-off in the S&P is a combination of the reopening stocks that money had moved into, which are often referred to as value names. They've started to see a bit of selling, and one of the examples there, as I mentioned, was the financial sector. But if we will look at the Nasdaq index, we can see here that it hasn't had that same level of selling. So what we want to keep an eye on is, does the S&P 500 stay below that 10-day average? Do we get to a point where the run-up in the technology sector as part of this sort of lower back end to the interest rate curve, does that exhaust on the basis that the PE valuations look a little expensive, or are we actually going to see the technology area break out of this sort of triple top through this range and continue to drag global equity markets higher? If we look at our local market and see what's happening there, it's a little more similar to the S&P 500. We've got the sell-off. We got closed below the 10-day average today. So a combination of those three will continue to monitor the S&P 500, the Nasdaq, and the XJO. When we look at an individual stock picture, we've had a couple of new signals, and I'll highlight those as I move through these top 100 stocks. So again, if you're joining us for the first time, the process is that we come in here, click on watch list, come into the list here, select from there the ASX 100. We would normally get the percentage gainers to the top, and then we would normally organise it in buy order and toggle through those stocks. Tonight I'm going to reverse that, just given that we're looking at that rollover in the XJO. So let's reverse it, and we'll look at the worst performing stock at the top, and I'll get them under sell conditions. So what we're going to be doing this evening is starting with the worst performing stock that's under algorithm sell signals. I'll move through these, and then we'll get to a certain point through the list where it will shift from stocks that are under sell into stocks that are under buy, and in the process of doing that I'll highlight which stocks we have a favourable allocation to, given supporting fundamentals. In the case of AMP, it continues to make lower lows and lower highs, and it's under algorithm sell signals, and you can see this red arrow. So if we think about it in kind of reverse, in that is that the primary signal is sell, the interim signal is the red arrow, and the stock price is below the average. So that would be a setup that associate with a negative price structure. So we don't own AMP as a consequence of that. Mineral Resources is under sell conditions, but I'd expect this to shift back to buy conditions in the coming weeks or months, and we've started to see a little shift in that regard where BHP was triggered today, and we'll look at that as we move through these names. Bendigo Bank under sell conditions, and support that thought. Likewise with QBE, that's under sell conditions. Bank of Queensland under sell. I'll skip through some of these fairly quickly, but maybe just highlighting to you the number of stocks that under sell conditions have that red arrow pointing down, and now they've broken below the 10-day average. So Orica, Reliance, I'd expect to see that shift to buy conditions in the next coming weeks or months. Insurance Australia Group under sell conditions, but it is a stock that I've highlighted that you can have a think about as a counter trend trade. I think the fundamentals will gradually improve for Insurance Australia Group, and I suspect we're sort of looking at a consolidation range at around 450 to 520, and ultimately will probably break to the upside of that consolidation range. ANZ on the short side of that, so we can see there it's under sell signals, red arrow below the moving average. Origin Energy, again, could be in the early stages of a basing pattern there, and the longer term fundamentals being supportive for a broader recovery in Origin, so not a stock that we think too much about on the short side there. Rio, likely to see this shift back to buy conditions, probably a little more downside before those conditions are met, but in the coming weeks or months I'd expect that to shift back to buy conditions. Westpac, so the short side of these banks, Westpac and NAB, if it's under sell conditions, under red arrow, they're below the average. We think CBA we're more likely to be a buyer of, CBA and Macquarie, but these other banks we see some weakness there. Atlas on the short side there, under sell conditions. Tabcorp under sell conditions. Nine Entertainment under sell. Suncorp under sell. As we move through these will start to have less volatility or less downside move. We obviously started with the worst performing stock, which was AMP, and we're moving through the list. AGL's under sell conditions, Magellan's under sell, Horizon is, so is Spark there. Worley's under sell conditions. NAB, as I mentioned, we're just thinking overhead resistance there at around that 27.50. Our preference remains CBA and Macquarie. Ampol under sell conditions. Transurban resistance at around that 15. APA fundamentals probably improving slightly for APA, should find some support. James Hardie, so this is one in the coming weeks or months. I'd expect to see that shift back to algorithm buy conditions, and I'll draw your attention to when that occurs. Brambles probably back up near resistance here at around this $10 or thereabouts. I was saying that the stock's oversold, the fundamentals for support about 4 to 5% earnings growth. We're now back at probably what I'd say is just fair value there for Brambles, but I would expect Brambles to shift to algorithm buy signals on the next slight sell-off, so that's again one that we'll keep an eye on in the coming weeks and months. Vicinity under sell conditions. Telstra under sell, but we've maintained exposure to that based on yield and franking credits, and obviously having some exposure to the upcoming sort of spin-off of TowerCo. ASX, again, one of the few stocks that we're happy to hold that are under sell conditions. Any pickup in volatility should at the margin improve overall transaction volumes. The stock is a little bit expensive based on historical PEs, but at around that $75 likely to track sideways and find support. Ansell, Sonic, we've taken profit on Sonic as we have with Ansell. Crown not doing there at the moment. Interesting that Star Entertainment's now under buy conditions. Medibank not doing anything there, not particularly fond of Medibank at the moment. CSL we quite like, so over the coming weeks and months I'd expect this to shift back to algorithm buy signals, and we'll be adding that back into portfolios. Amcor, worth pausing and just making a note on this one. It is under sell conditions, but we can see here on an interim basis it's got the green arrow. If volatility picks up in the market, Amcor is a defensive place where fund managers will take another closer look at allocating money towards Amcor. So it is a name that you could put on your watch list. Car sales, looking for that to switch back to buy conditions later this year. Next DC, we remain cautious on that. Newcrest, our preference is Northern Star over Newcrest. TPG shifted to sell signals today, but you can see there that I've given more upside up to around that $7 level there. Coles, so under sell conditions, and our preference is Woolworths over Coles. Fisher and Paykel under sell conditions, and that we've taken profit on that. Just to jump back to Fisher and Paykel, it just trades on a high PE. It's pulled back. At this stage, it was up at about 50 times earnings, but it's still trading on a high PE even following the recent sell-off. But it is a good quality business, but the recent earnings look like the growth rate slowing there for Fisher and Paykel. Boral, look for that to shift back to buy conditions in the coming weeks or months. Ramsay Healthcare really tracking sideways. That's an income contributor for portfolios with not too much in the way of growth. Now we've shifted out of stocks that are under sell signals. So again, if you're joining us for the first time, just to share with you a bit of education on this, the stocks that we went through, the most recent algorithm were all sell signals, which were these red boxes up the top. Whereas now, if we come down here, we can see the most recent signals, a green box, which is the algorithm buy signal. And when a stock shifts from the red signal into the green for the first time, at that point it's added into the model portfolios, and you can view that by clicking on model portfolio. Go into whichever list it is that you're interested in. Often I like to look at this from clicking on the days held, getting the stock that was most recently added. You can see there BHP was added today. Previously we had Macquarie that was added, and so on. So in your own time, click on model portfolio, go through there and have a look at those models. Back to where we're at here with CBA. So CBA was under buy conditions here at around 81, rallied up to 105. In some cases we've taken profit on this, and we'll look to add this back in, and our rationale was we really took profit up at around $100 there and increased our exposure to Macquarie, and we'll add CBA back in on this sell-off at the moment. So as we continue to move through these, all under buy conditions, Linus under buy conditions, but we're not doing there. A2 Milk under buy conditions. That really sort of sits in a high risk recovery basket. A2 Milk, and I'll talk about more of that when I summarise things at the end of the recording. Qantas we like, it's in the model portfolio, but not a stock that we're certainly overweight in. Illumina under buy conditions, but not a stock that we're focusing on. REA, so we can see here it's shifted from sell conditions into buy conditions, back there at 106 now, pushing 160. On a fundamental basis, REA just looks too expensive to me at the moment. Oil Search preference remains Woodside over Oil Search, but Oil Search is now under buy conditions, and you'll find that in the model portfolios. Lendlease under buy conditions. Any weakness that we see here in Lendlease, which is a result of just broader market selling, there may be an opportunity to take a closer look at this, and it might be worth just making a note there, reviewing Lendlease if you see it sort of really below $12, and just look for a reversal in, and I'll draw your attention to that on the blog. But if we see this stochastic come down a little more and then it turn higher, there may be a trading opportunity there for Lendlease. I think you're starting to see a little bit of repositioning um, into Lend-Lease with a slightly more positive outlook for it. Sol Patterson not doing it there at the moment, but it is under buy conditions. Incitec, again, maybe one to just make a note of that. If we really would want to see the indexes get back above that 10-day average, before getting too aggressive with the amount of stocks that you're buying, or any long activity in the market. In the case of Incitec, I think that the second half earnings are going to be better than the first half, and it should be supportive for a better share price. So, one to have a think about capitalising on any weakness that we see over the coming days. Sydney Airports, that's in the model. Challenger in the model, but not a stock that I'm particularly keen on. Fortescue, one of the better performing stocks in the model. So if we backtrack where that shifted from sell conditions into buy conditions, and it still remains our overweight resource exposure, but just highlighting that we've now seen BHP and Oz Minerals added to that list as well. Cleanaway, so again, have a think about this. It's a defensive business, so if we see some selling here in Cleanaway, and you could pick this stock up sort of somewhere between that band that I've created there, which is sort of 260 down to 240. So if we actually were to see continued selling in the US, and which will result in broader base index selling in Australia, which drags down all the stocks often as part of an index trade. So maybe around that 250 level would be an ideal target that I'd suggest is a fairly low risk entry level into Cleanaway. Treasury under buy conditions, it's rallied strongly from that signal, but as I suggested last week, we're now up against a level that I think is close to resistance. Beach, I think just a little higher risk for me. I think Woodside Petroleum's the better positioning there. Macquarie I like. I think this is a stock that you could acquire on any weakness over the next week in the market. If you don't already hold it, that certainly remains our preferred financial exposure. BHP, as I said, has now shifted from sell conditions into buy conditions. So depending on how aggressive you want to get with this entry, so a conservative approach will be to wait for this stochastic to start trending higher and the black line to cross above the red. An even more conservative approach would be to simply wait until this price action here gets back on above the 10-day average. So just as a filter of fine tuning your timing, but just highlighting that we've now gone from sell conditions into buy conditions, and as a result of that, it's now added into the model portfolio. Woodside under buy conditions. The interim signal, which is this red arrow, suggests that we're still in a little bit of a downtrend. I wouldn't expect it to take out this low, given that oil prices are holding up above $70 a barrel. So we're likely to be only maybe a day or two away from that finding a support. So again, if you don't own it, that's one to have a think about. The index, this is the top 100 index, but similar to the XJO, so the pattern there's looks familiar. Aristocrat Leisure, one of the better performing stocks in the model portfolio, shifted from sell into buy conditions here at around $30. Stock now pushing 42. Stocklands, we hold this in the model, switch from the sell to the buy condition there at around $4. Stock now pushing up to around 480. Centre Group, we added that into the model. If you've been following the recordings over the last month or two, the strategy's been to focus on the SLF, which is a ETF that just gives you broad base exposure. I'll have a look at that at the end of the recording, but that's continued to perform well for us. Oz Minerals, so this has now shifted to buy signals. I've created a extremely wide band here for Oz Minerals, and it's really just reflective of where was the last level of resistance, what level did this rally begin at. Obviously strong copper prices have been a big support here for Oz Minerals, but also increased production that Oz Minerals has achieved. It's obviously hard to get the visibility around whether this sell-off in commodities, and we've seen it from lumber prices to copper, gold, iron ore. Oil's probably one of the few commodities that has held up well. I would think that gold's a reasonable buy on this sell-off. Whether the other commodities, whether we can see copper and iron ore, rebound from these levels, or whether there's a little more selling yet to go. Obviously, we're just watching those US indices as a bit of a guide for where that risk sentiment sits for global markets. But volatility's obviously picked up. We've seen the Nikkei down almost 4% at one stage today, finished not far off that. But when you look across the spectrum, whether it's been in cryptocurrencies, US financials, commodities, there is some cascading selling that's taking place in global equities. So, we do need to be a little bit more sort of aware of those risks at the moment. And a way to manage that is obviously just position sizing or using stop losses, or making sure your portfolio allocations have some hedging in there, and are weighted towards more defensive assets, which we do, which we're obviously, that's the way we're positioning our portfolios at the moment. But in the case of Oz Minerals, just highlighting that we're now under algorithm buy conditions. You've got the green arrow there. The stochastics probably close to turning up, but not quite there. So that'll be one along with BHP that I'll review and update my thoughts on that tomorrow on the blog. Computershare under buy conditions, that's doing extremely well. The other one just to have a think about there is Link. I think both Computershare and Link, but Links may be offering better value at the moment than Computershare. Cube we like and we hold this stock, and that's just on the back of increased freight or container volumes coming into Australia. Maybe upside in Cube to back through 350. As I've mentioned previously, I don't see it as a really strong breakout trade, but we're buyers of it around this 280 level, and we hold that in our portfolios, and that's continuing to perform well for us. Santos preference Woodside over Santos, but Santos is under buy conditions. ResMed's under buy and performing very well. So if we backtrack the history here, so it switched from sell to buy condition there. You'll see it in the model portfolios, and it's continued with this bullish structure, and as a result we've seen continuation of these buy signals and no sell signals throughout this strong trend here. So I expect that to continue. IDP Education under algorithm buy conditions, switch from sell there to buy, and it's performing quite well. Not a stock that I cover in great detail. Seek, we like this business. It's a good technology story, but it is expensive up here, so I'd like to take a look at that on a pullback and a next algorithm buy condition. Star Entertainment, just drawing your attention to that's now switched back to buy conditions. So again, if you want to take a more conservative approach to this, you can see that the stochastics, the first signal that's turned positive. So first of all, the alert is off this algorithm buy signal. Then we go, if we want to finesse the entry timing, okay, you could look at the stochastic, or again, a more conservative approach would be to wait for it to get above that moving average. BlueScope Steel under algorithm buy conditions, performing well. IGO under buy conditions, that's a recent algorithm buy signal there. Zero, like this is a really high quality growth company in the Australian market, but is getting a little bit expensive. If we were to see that sell off in the Nasdaq, thinking about a triple top that could be in place there on the Nasdaq, if we do get a sell off and we see some of these tech stocks correct, then Xero would certainly be a name that's comfortable to buy on the next algorithm buy signal. As with Domino Pizzas, good business, good growth track record, and we'd look to buy that on the next algorithm buy signal. But it's certainly been a good performer, Domino's, and I'm just jumping back to that chart, and if we just roll in a bit more data, so it's switched from sell conditions there into buy conditions at around $70. It's doing well. Again, you'll find that in the model portfolio. But next buy signal, I'll draw your attention to that on the blog. WiseTech doing well as also, so off that $25 support. Aurora switched from sell conditions there to buy conditions. The stock's rallied from 250 now up to 320. have a look at that on the next buy signal. ALS switched from sell conditions into buy conditions there at around $9, now pushing 12.40 odd. Cochlear switched from sell conditions to buy there at just below 200, now pushing 245. JB Hi-Fi under buy conditions has been for quite some time. The original switch to buy was back in 2018 here, where we've gone from the sell signal there into the buy signal at around 22, now pushing up towards 48, and even the more recent signals there will we'll take notice of these earnings results for JB Hi-Fi with great interest in August, just to see what those consumer spending trends really look like post sort of some of the government support fading. Link administration, as I mentioned, starts to offer reasonable value on a comparative basis to Computershare. If you were trying to finesse the entry here, it is under buy conditions. We can see the interim signal is a red arrow, and the price action for the moment is really on that moving average. The stochastic's moving up. You can see the support level that I've got there at around 480, or obviously in a soft market we may see it back down around 450, but I'll continue to monitor that and update you on the blog. Downer EDI we're holding this stock in our portfolios, as with CIMIC. CIMIC is under sell conditions, but we're looking to CIMIC is really driven from fundamental analysis of an improving balance sheet and continuing to win work in hand. Looking for that inflection point in the CIMIC share price where they could potentially then begin sort of a multi-year recovery in the share price. Wesfarmers, one of the ways to de-risk that CIMIC trade is to think about buying call options instead of buying the stock. So if you'd like to understand more about that, again, give me a call in the office and I'm happy to sort of walk you through the strategy there. Wesfarmers we like. This is an overweight position in our portfolios, shifted from sell conditions into buy conditions, and its stock's performing very well. Is it getting a little expensive there, but downside risks are relatively low. GPT we like, but preference still remains the SLF. Mirvac's done extremely well. Goodman Group's done very well after switching from sell conditions into buy conditions. They're at around $16, now pushing up towards 21, but is getting a bit expensive. Charter Hall's done extremely well. Evolution, again, I paused tonight and just have a think about what's happening with gold. So the front end of that yield curve spiked up. That's pushed gold prices down, but at the back end of the yield curve, we're looking at that level of the 10-year treasuries in the US. We're back at just above 1.4 or back below 1.5% on the 10-year. That should set up an environment where I think gold can actually rally, and any concerns around inflation probably are not the primary driver of gold at the moment. So the way to think about that is either, if you don't hold Northern Star in your portfolio, take a closer look at that. Another alternative is obviously Evolution here, which is under algorithm buy conditions. Appen Group technology stock, we're seeing no evidence of improvement in earnings, but the company obviously came out with an announcement about cutting operating expenses. The markets seems to have taken that in favourable light, and we're seeing a very moderate recovery in the share price, also supported by that international rotation out of value names into growth, where we've seen the Nasdaq, obviously, which contains a lot of growth stocks, we've seen the Nasdaq index perform quite well, which has helped out the tech stocks here in Australia. There's still value, I think, in the Asia tech stocks. So, things that so one way of playing in that is the Asia Tiger Technologies ETF. On a relative basis, they still look reasonably cheap compared to some of the tech stocks in the US. But Appen Group, think about that from a trading standpoint. Just if you are setting up a position in this, run a stop loss below that sort of $12.50 level there roughly, because it's really a momentum play on that Nasdaq moving higher and the company responding with cost cuttings, but ultimately we'll need to see growing revenue there to drive a more deeper recovery happen. South 32 switched from sell conditions back into buy conditions, but preference really is BHP. At this stage, we haven't acted too aggressively on South 32 or Oz, but we have on BHP. Woolworths we like at the moment. We think that's a good defensive way to think about allocation in a portfolio. Northern Star, buying this back at around $10, I think is a good opportunity in the market. Altium, a high quality tech stock, turned down the takeover offer at around 30. I think it was around that $36 level from Autodesk, which is a US technology company. And the stock price is holding up obviously well there at around that bid price. Afterpay, under algorithm buy signals, Afterpay and Zip are two for you to have a look at. There are obviously risks there, so again, have a think about using stop losses on those. But you'll notice Zip has rallied off the recent algorithm buy signal, and there we are back to AMP. Just to finish off tonight and summarise just some of the notes that I've got. So IPL I like, Woodside Petroleum I like, Bega, if you have a look at that BGA, I'll just load that chart up for you. This is one that's been under algorithm buy signals and's had a reasonable rally. Northern Star, we touched on that, so hopefully you've made a note there. Macquarie, Cleanaway, Link, all ones that I've commented on tonight. Lendlease, Star Entertainment, they're all ones that you should be sort of tracking on your watch list. As the recovery plays, I still like A2 Milk, CIMIC and Lendlease. On the ETF side, let's just have a quick look at these to finish up. So the Asia Technology ETF, I think that's one to keep on your watch list if we see any selling in the broader US market. The Cure ETF still remains our overweight position in portfolios, which is the biotech ETF, and that's held up extremely well. We haven't really seen any selling there. SLF, which is the property ETF, so we still like this as a replacement exposure to holding too many REITs in the portfolio. IZZ is under sell conditions, but to me there's value starting to appear in some of these Asian blue chip stocks. So whether you play it through the IAA, which is the Asia Top 50, or the IZZ, or the Asia Technology stocks, I think there's a space for that in portfolios. And on the hedge side, as I posted today on the blog, so keeping it simple, the Bear ETF goes up in value if the market goes down 1%. This goes up 1%. So if you start to see that momentum in global equity markets, continue with a risk-off sentiment. One of the ways to benefit from that is the Bear ETF, or the short side of the banks. So as far as our hedges go, we're running NAB, Westpac, and some of the inverse ETFs as a hedge. And again, if you'd like to know more about those, give me a call in the office. Thank you for listening in, and I look forward to speaking again next week.